butterfly does.
All right, guys, what is going on, dude? What is up, man? What is up? Not equities. Not equities. But hopefully you guys are blessed, man. Hopefully you're blessed. Welcome to Wall Street Wednesday, right here on YouTube. We'll look for something. I don't think I'm gonna trade today. I think I'm gonna relax. But I still want to see if we can find something to watch, something to look for, and go from there. So Dow Jones, our strongest index today in a bloodbath of a market today. So what I'm thinking is run the highs and then run the lows. That's what I'm thinking. That's what I'm going to stick with. So, well, at least for now, right? I mean, you can't always, stick to your bias, but I feel like something like that. So on a normal day, I would screenshot something like this for myself. I would journal. I'd probably journal that too. Not that I'm going to really get into journaling today, but mine's right here. Well, one of them anyway. I have a lot of these. Excuse me. This would be something that I would journal. I would say, hey, it's it's Wednesday, July 24th. Indices are ass water, and Dow has some clean lows from the AM session, and I'm anticipating for the PM session to run lunches high and an intraday high, but remain weak for the remainder of today. So we're gonna see. Okay, so not that I'm trying to do a bunch of shit, but I would say, okay, run the stops, wait for an imbalance, and then short that imbalance to go lower. Something to that effect, right? Like that's essentially what I would anticipate, especially if we can start to see some sort of framework that sets up again for the PM session. Does that make sense? So we'll watch this, and then I'll also update you on yesterday. For those of you that aren't members that do not watch the market reviews, I'll update you on ES from yesterday. We were bearish. Well, I was bearish. We'll talk about it, and then I'll try and give you some general ideas. And then, we'll see where we're at after that. You guys good with that? Drop a 1 if you guys are good with that. What's good, Willow? First today, Naruto, Alex, what's going on? Fuck it, we ball. Yesterday, I haven't done anything today. I mean, I bought Tesla. I bought a little bit of stock in Tesla today, but that's really about all the action that I've done today. What's good, Eberneth, Larry? Welcome to the SMS community. I know it's your first month. Same with Marvelous as well. We got some bronze snipers in the chat. It's good. Crispy J, Cameron always finds his way back somehow. G 2020, Hermita, George, Marshall, Bell, Monkey, Lamad, Flacco. Flacco made me proud yesterday, dude. I felt bad because I wasn't following Flacco on Instagram. I was like, what the fuck? So I had to follow him. Man. And then they were reading, quoting one of the Ryan Holiday books. I don't remember which one it was. I'm pretty sure it was a Ryan Holiday book. That's the shit I like to see. That's what I like to see right there. You know what I'm saying? I think that was Flacco, at least, unless my memory's jacked up. What's good, Lamont, Beverly? I think that's everybody. Zoc Joe, Simon, and Aaron. What's good, everyone? Thoughts on gold? By chance, wondering if we climb back higher? No, I don't know, man. Yesterday, we talked about gold, and I said that I would not short. I was like, yeah, we have lows, but I wouldn't short that. And sure enough, we traded higher. So that's kind of funny, Plus, there was a person on Twitter. I'm not going to roast them, but there was a person on Twitter the other day that was like, oh, unpopular opinion, bearish gold. And it flew higher. And I'm just like, that's so funny to me. I love that shit. I love when people are just really fucking wrong. It's just, I don't know why that's so funny to me. I mean, I'm wrong sometimes too. But when somebody is bearish after like 3 days of selling, really? Like, you're just asking to just fuck that, you're just asking to get your ass kicked by the market. But hey, we all live and we learn, man. We all live and we learn. Some 8-year-old Willow says wanted to buy Tesla stock. Nice. Tell him to hold on to that until he's old enough to drink, and he should be fine. Zoc Joe, where were you, man? Where were you? What's good, MJ? Why were you away, Ron? What were you doing? What could be more important than trading, my friend? What's good, Harmon? Yeah, you let me know, bro. You let me know. What is more important than trading, dude? You think this shit is a game? You think this is a game? My boy, this is real life. This is real life. But it's all good. Let me just delete some of these markups because they're kind of in the way. Still left over from last night's market review when I was talking about a bunch of shit. About a bunch of stuff. All right. So let me give you an update. What's good, Toby? Thesis behind Tesla long? Well, fucking just daily gap. Overall, long-term bullish. I only bought a little bit in case it keeps going lower. Oh, university? Oh, okay. Well, I guess that makes sense. I'll allow it. All right. Update from yesterday. I'm pretty sure I gave you this imbalance yesterday on the session. And you guys already know, what do you do if you have a large imbalance? All right. As with a pizza or a strawberry cheesecake, you cut it in half. All right. So that 50% was right there, 56.17 and a half. Price doesn't trade above that, like one tick or two, but ultimately can't really get past that. So that is a signature of weakness. Okay. That is a signature of weakness. So we had many instances yesterday of weakness, right? Remember the Dow Jones trading higher when ES was lower. That's weakness. Unable to, trade beyond 50% of this imbalance. That's weakness. And although, because I want to talk about this for a second too, although price retraces and it rallies, look at every single rally in here. They're very weak, right? Now, so I'm saying, like, it does rally and then it comes all the way back, and it looks like it's going to rally and it just trades lower. We consolidate until that last hour. We do have one more push, and then it just gives that all up, and it came down here, and that's when I was hyped in the Discord. I was like, fuck yeah, baby. That 5600 was done. Okay. Equal lows, too clean. I don't know how many times I mentioned that yesterday. A lot. And then that pre-market low at 5602 and a half. Right? So too easy, too clean. I mean, the only, because I saw some of you post this in the Discord too, and I almost did this. One of the, I guess, struggles, or one of the, hurdles that we face as traders is the impatience. And you hear me, because we talked about this the other day too, how I think it was shit, forgot his name. It was one of them anyway. Said that it was Lucas, I think. There we go. It was Lucas who, saw that when you enter, or that when he enters, and you would typically want to see 2 or 3 candlesticks before it goes your direction, and that's not entirely bad until you start trading days like yesterday, where we consolidate for a long time. But I'm still gonna, show you that there was still opportunity here. At the beginning of yesterday, we talked about how, and one of you brought this up in the chat too. You said, oh, that looks like a market maker sell model, right? Consolidation, manipulation, first area of distribution, and then that second area of distribution that I outlined before we even hopped on the stream, because I showed you that screenshot last night in the market review. So just like Marcus Aurelius mentioned in Meditations, right? What we need to do is take the bird's eye view of things. So there was I don't know which passage it is, and I must have overlooked this, but there's a portion in there where he basically talks about looking at the world in its completeness, and then seeing how, armies of men really just looks like a pile of ants, from a distance, right? Taking something that's maybe large up close, but when you zoom out, it becomes small, right? Or like, say, the Earth in the perspective of the entire universe, it's very small. So in price action, sometimes we do those same things, right? So let me kind of further explain that. We have our equal lows down here, okay? But if you aren't really, let's say if you didn't mark it up, or you are not aware that 5603 is down there, and you're looking at a 1 minute chart, you know, you might look at this and go, you know, what the fuck is this? Like, what am I supposed to do here? You know, like, oh, this looks so janky. I mean, it does. I'm not going to lie to you. It does. But remember, in the grand scheme, though, this is what started the second leg of distribution, right? So yeah, it stood here for a while, ran some highs, ran some lows in the short term, you know, grinding out all the traders who are impatient. And then once, you know, once everybody was, I guess, out or break even or whatever, then, you know, we get that run at the end of the day in that final hour. Someone in the chat had said yesterday, final hour finesse. Right. You know, sometimes, and last year when I used to stream, probably in the middle to the beginning of 2023, I used to talk about how the time crunch, right? Like the longer we take not going the way that we should, the less likely it's going to do that. And a lot of the times what you saw, right, we had streams just like yesterday where we really didn't do a whole lot from 12 to 1, right? Like yesterday, like what the fuck? We didn't really do a lot. And so, yeah, sometimes it's going to make its move in that final hour. And yesterday was that case. So my point is, if you're in here on a 1 minute time frame and, you know, trying to like do stuff or wait 2 or 3 candlesticks, you know, for the market to go your direction, but it doesn't do that. That's why we have the framework as part of it. It's your roadmap. You know, it's telling you, hey, the overall perspective is still bearish. Right? Aiming for the low resistant lows or the equal lows or the consolidations, really all this very close together. So you're up in here, you know, worrying about what this in here is doing when you had the overall framework. You knew, I'm not going to say you knew that it was going lower, but you saw how many times yesterday I said, I'm sticking to my guns. The equal lows are too clean. Ricky might be going long, and that's fine. I'm still going to stick to what I think and, you know, what I basically believe the market's going to do. And so I stuck with that because that's what the framework calls for. And so now I'm going to counsel you to go back and you don't have to, but if you want to rewatch that video from, what was it? The beginning of last week, I think, I gave you criteria for stop loss placement just based on the framework by itself. Real quick example. If you're trading within the first stage or the first area of distribution, and you don't know where to put your stop on a small time frame, your stop can go to the previous stage, which would be the manipulation. If you're trading this would be redistribution. If you're trading the redistribution, I'm just going to put a little R right here. Okay. If you're trading the redistribution or even like a retracement after that, because that's what I played in here. Right. And so, yeah, I took a little bit of drawdown. It doesn't really go my way. And I'm like, well, this is bullshit. But you're trading the second leg, you're trading, or the second stage, whatever. Like, let it breathe, let it run, let it pan out. How many times have you got out before the move because you were impatient? I'm not going to answer that because it would be embarrassing to tell you how many times, probably a couple hundred times in my lifetime. Okay. So it's like, well, you know, and like, no, like, okay, ego aside, bro, when I tell myself things, I remind myself of the things that I've done. John, you've like dominated the orange juice market. You've called the low for silver, both lows of silver in 2023. You know, you get the bias right all the time. It's just sometimes the entries or that consolidation, that's what fucks you up, even though you're usually right still. And I'm reminding myself of that. It's like, you know what? I usually am right. And, you know, so fuck it. I'll hold it. But yeah, so it never comes back to the high of the beginning of the redistribution. Right? And we get that collapse right at the end of the day. So again, if you're trading anything in here, if this is too tight of a stop, like 3 points, maybe 4 points, okay, well, there's a few more options that you have. It could be the high end of this imbalance. It could be the high end of that first distribution. So guess what? It never gets close. Oh yeah, Ricky. Man, Halliburton. I let go of that shit too early. I don't want to talk about it. Well, I guess we can look at it later. But yeah, Halliburton was fucking stupid. That'll never happen again. That's why I don't touch those markets anymore. Like nobody you know, including me, will ever call a better trade than orange juice from like 2020. It just won't happen. Same with oil. Oil went negative only one time in the history of life. And so I was like, yeah, we can long Halliburton. It will never do that again. I'll never outdo that. That's been set, you know? So we're not going to fuck with that. But anyway, let me get back to what I'm trying to talk to you about. If your stop was at the high end of the imbalance, never got close. If your stop was up here, it never got close because it's a weak market. Weakness up here, weakness on the side of this imbalance. It just had a little bit of a consolidation before it traded lower. Okay? So ideas that you've already been given have still panned out, example after example. Right? So let's see if we can find a one-to-one. That imbalance, you might not have found a one-to-one. I'm gonna keep it crispy with you. I lied. We can always find a one-to-one. There's your one-to-one right there. Right? 5-minute imbalance. It does go against you, but guess what? You take what? 3 points of drawdown, so $150 a contract for $750 in profit, I think. What's half of 13? 7.5, right? That can't be right. 6.5. That's quick math for you. So $650 a contract at only $150 a contract to draw now. Never even gets close to your stop. Not even close. And goes right there. Beautiful. So, you know, I mean, again, one-to-one, yeah, I don't want to be known for that. I'm not going to go viral for telling you how to trade one-to-one RR. But remember, that was never the point. The whole point was not to get 1 to 5, 1 to 10, 1 to 3. You know, the whole point was you just want to take a dub. You just want to win. Maybe risk 1% to make 1%. The math doesn't really, you know, that by itself isn't going to play out in the long run unless you get in sync with order flow or that framework that I've, given you already. That's the only justification for taking a 1-to-1. But yeah, everything was there yesterday. So I don't want you to take this the wrong way. And I do not recommend doing this. And you asked, so I'm going to be honest with you. I actually didn't have a stop yesterday. I did, however, I had a mental stop. Okay. I do not recommend to do that. I do not recommend that. Okay. But it was probably near 21 or 22. That was my mental stop. Okay. But yeah, we ended up rolling over very aggressively, and that was just too nasty. Okay. But yeah. So I know, MJ, I know. I usually don't do that. But given yesterday, that's just what I did. So take it how you want it. Right, Flacco. You can't get stopped out if you don't have a stop loss. All right, so watch this now. I'm just going to draw it fast because we're kind of pressing for time, okay? So that's the framework, right? In a very general sense, yes, that's the framework, right? Now, this is the part where some of you are probably going to be like, what the fuck? Because this was me yesterday. Because I came back in the evening time just to see what happened, and we fucking gapped like 20 points or something. It was crazy, right? I'm like, oh my god, what's going on there? Which is cool, even though I'm not in it anymore, but that's fine. What you have to realize, okay? Tuesday at 1 o'clock. Tuesday at 1 o'clock was right in here. So that same framework, okay, that your jaw is going to hit the fucking floor, right? Consolidation, manipulation, weakness, second leg to go lower, right? That framework, aka a market maker sell model on a 5-minute, was the beginning of a 1 hour second stage of a market maker sell model. So guess what? You had a market maker sell model within a market maker sell model. Oh. It's all fractal, dude. The same way you can have an imbalance inside of an imbalance. So it's not surprising today that we're getting that sell-off. One of you pointed out the equal lows down here anyway on SPY, 542.44. 542.44 is equal lows, right? We made our high on the 16th. We traded lower, and then guess what? On Friday of last week, we crossed, well, actually that was Thursday, I'm sorry. Thursday crossed 50%. So guess what? Monday and Tuesday, we traded back above 50% into that premium, right? 1 hour imbalance here. Above 50%. So that small model here was part of the larger model here. Is that pretty cool, chat? I'm trying to pull as many, rabbits out of my hat as I can. All these little nuances and, general things to look for, shorting in premiums of premiums. So it really shouldn't be a surprise to anyone that we sold off today. I was still looking for Nasdaq to trade above those equal highs on the 1 hour. And guess what? We didn't get it. Okay. We didn't get it. We got the low resistant highs, but we never made it to the equal highs. Okay. I was wrong. Okay. Not a big deal. Okay. You're allowed to switch your bias and, you know, get in sync with order flow. All right. Oh, Ricky, I totally skipped over that. He said, I knew you were legit when you started applying the concepts outside the norm assets we trade. Oh, bro, nobody in that company ever looked at orange juice. They probably didn't even know you could trade that shit. I was like, yeah, it's tradable. Orange juice, coffee, corn, all that shit. I never called it trading corn. I never called it bias in corn, but coffee I did. That will never be outdone either. It will not be. It won't be done. Where's Halliburton? Where's good old Halliburton? I'm surprised you remember that. That was so long ago. That was right down here. Because I want to say it wasn't at all-time lows, but it was like, let me see. It was below 10. Yeah, it was right down in there, bro. Everybody was shitting themselves with oil. Yeah, I picked some up, I think at like 7 and 6 or something like that. I don't think I got in at the 4s. To be honest, I don't remember. That was like four years ago. But it, like, I remember getting in and I think I got out at 12. And then, you know, this is why I don't look at it, because I was in at the 5 and 6s or 7s and we traded all the way back to the 40s. So your boy was paper hands. Straight paper hands on fucking Halliburton. That's okay. You got the bag and, you know, got the wham bam, thank you, ma'am, and just left it at that. Let's go look at Dow for a second. We haven't really done anything, so that's always nice. That's always nice. You can only lose 100%, but win 200% and more. Math is math. G's a gambler. I can tell. That's the kind of shit that gamblers say, you know? Anyway. Hit my 6 months with John and have learned so much, says Omar. And constantly still learning with John and everyone in the Discord. Very nice. You love to see it. You love to see it. Damn it, Ricky. Long on NQ, bro. What's good, Electric? Ricky, why do you long every time I want to be short, bro? Why do you do this? Why do you do this? 344. So you're in from like right here? This little 5-minute imbalance? Ricky, you disgust me. We'll watch it. You know, to be fair though, that's in alignment with what I want for a Dow anyway. I guess there is a little bit of merit there. So yeah, if Dow ends up still doing what I want it to do, that would likely push NQ higher. All right, maybe you got a point. Maybe Ricky has a point. Stop loss at 19,320 down here. Okay. No, that makes sense. That makes sense. Wonder if we'll get a new high here in a minute. We'll watch it. Ricky coming in with the signals. You gotta love it. You gotta love it. While using a mental stop, how did you ensure that hope does not diminish your ability to make rational decisions? What a philosophical question. I love it. For example, moving the stop loss further, or you have completely solved this problem. All right, let me reread that again. How did you ensure that hope does not diminish your ability to make rational decisions? So I was watching and waiting. And what I was doing is I was trying to explain that a little bit earlier. I probably didn't do a really good job, to be honest, but when you look at rallies, okay, when the market trades higher, what I'm looking at is to see if the market following that ends up, reversing. So what I mean is there's a really big difference. If a market trades higher, has a shallow retracement, and then continues higher, that's a fairly strong market, right? If the market rallies and then gives back like the entire rally or more, that's a weak market, right? The shallower the retracement, the stronger the market. The deeper retracement, the weaker the market, generally. Okay, don't write that down and then apply that to like every price swing. Okay, but in a general sense, the deeper the retracement, the weaker it is. Okay. I don't know if I can really find a good example of that, but like ES from yesterday, this is what I was trying to explain. When the market traded lower and then off of that, it looks like, oh, that's a down candle that was respected, this should trade higher. It's like, no, it shouldn't. It comes up to that lack of wick and then easily comes right back off of that. That's easily a signature of a weak market. This market was doing what? Just coming back for that lack of wick right there. And then easily gave that back. So there was nothing strong about any of that. There was nothing strong about any of that. So that's what I was looking for. I was looking to see, is the market weak or is it strong? Like, so what I'm looking at right now, just for general sake, on this 1 minute time frame, there's a small imbalance right here. It's like, okay, well, that 5 minute imbalance is here. We rally, we trade into this, right? Shallow retracement, and then we're off of it. So that looks like a fairly bullish market. I didn't point this out. I was going to, but there's a small down candle right there. Seeing it react like that, it looks like a fairly strong market. Okay, not that I'm not trying to look at like every single move, right? That's a little absurd to me. But I'm just looking to see, are we giving price, like, is it coming back and giving up its gains, or not? So it's hard to explain into words. It's hard to quantify that specifically, but I think I did my best in trying to explain that to you. Does that make sense, G? So there was nothing strong about ES yesterday in the PM session. It would rally, give it back, rally, give it back. That's not a bullish market, not even close. Okay, not even close. So yeah, ES looking like it's following suit for the short term at least. Yeah, we'll watch. Just watch Nasdaq here for a minute. Take a look. Take a gander. Yeah, Ricky, I know you have the side-by-side charts. I don't have it that way. On my other one, you have it more like vertical. I have mine horizontal. You know, mine looks like a hamburger or a cheeseburger. Like the cheeseburger menu up here with the 3 lines on it. That's called a hamburger menu if you never looked at that. Or if you never knew that. And yours is more vertical. The problem I had with vertical charts is they don't line up. So when you hamburger it, they will line up lows for lows, like time wise. Whereas the vertical ones, you have to like make sure is that 11? Is that 11? Is that 11? Like it's just too much. But the hamburger ones, I can just draw a line. I can just draw a vertical line and go, okay, you know, there's the low, right? Do the other lows line up? Yes or no? That's why I do that. But whatever works, man, you know, whatever works. High being taken and can't decide if it's liquidity being taken out or not. Electric doesn't know. There's a small gap right there, by the way. Doesn't know if a high or a low is a liquidity sweep or not. Well, that's why we look at framework. That's why we look at things like liquidity. So for example, like what I said earlier with Dow, that's what I'm looking for. If it's going to trade above these highs, I'm looking to fade that to go lower for the lows. That's what I'm looking for. We might not get that. I doubt I'll even trade this today. But overall, like that's what I want to see. Right? So I'm anticipating that instead of just hopping on the charts and then, you know, looking at every high or low being swept or, you know, whatever. That and relative strength. So there's that. Ooh. Look at that. Look at that retracement. Look at that retracement. That looks like a weak market, right? Deep retracement clears that imbalance out. Ooh. Gross. What other questions you guys have? We talked about framework. We followed up with the bias yesterday for ES. I also pointed out that you can have small frameworks within larger frameworks, which is really fucking cool. At least I think. We talked a little bit about consolidation and how that can be a little bit nerve-wracking, but I've given you guys things to study time and time again. When price makes the high of the day or low of the day, and look at the retracements, and don't just look at when and where price makes the high and low of the day, but study the retracements too, because you'll be able to trust those things, to trust them as your stop is what I mean by that. Right. Electric, right. NQ was down, S&P was down, and Dow Jones was up. Is that manipulation, which is tradable, says Jonas? Yes. Yes. If one of them does something the other two don't do, that's manipulation. To me, that's the easiest way to see it. I don't need a book map. I don't need volume. I don't need any fucking thing. Anything. Except price. I don't care. You could have all the volume in the world. You could have all the book map in the world. You could have all the indicator that your heart desires. I don't give a fuck. It's manipulation, pure and simple. I don't want to look at data, or I don't want to look at something that I know doesn't have an impact on price, if that makes sense. I don't want to look at it. Oh, well, you know, buyers are stepping in. Man, fuck those buyers, bro. It's going to run liquidity despite however many buyers there are. Doesn't matter. You know, if you step in front of a train, you're going to get ran over. If 1,000 people stepped in front of a train, they're going to get ran over just as easily. Because one person going up against a high-speed train, that ain't going to fucking work. It's not going to work. There is no influencing price to that degree as a retail trader. It's not, you're not going to do it. Does that make sense? I know I talk about that all the time, but I'm trying to give it to you here. See these deep retracements? This is a classic signature of a weak market. We rally. Oh, that's a break of structure. We retrace. Oh, but we never make a new high. And then we come all the way back down to these levels. That is a weak market. NQ, right? Nasdaq. I mean, we watched that and it came all the way back down to these levels. That's a weak market. The Dow, unable to rally at all. I mean, it rallied a little bit from the session. 12 is here. I mean, it gave us a little bit, gave it most of it back, rallied, gave that rally back. So currently it's a weak market. From the perspective of what I had earlier, I would actually be a little bit surprised if we come down to clear these lows without taking the highs first. I would be a little bit shocked about that. Let me look at one thing real quick. So, actually, let me do the highlighter. Lunch's low is here and lunch's high is here. So we have stayed within that range. So we're probably going to get some sort of expansion pretty soon, right? Markets consolidate and then they expand. Small ranges, large ranges. Just look at the daily time frame. Look at yesterday's range, small range. Look at today's range, very large. But anyway, lunch's low hasn't been taken. Lunch's high hasn't been taken either. Yeah, weak. Nasdaq, weak sauce. Weak sauce. Needs to hit the gym. You know what I mean? What made you use the pre-market low yesterday instead of London's low? Or if you're asking about ES, it's because that pre-market low was only like 1 or 2 points off of the equities AM session low. So they were close together. London was a bit of a stretch. What I mean is, if you are trying to hit a home run, okay? Sometimes price doesn't always do that. It'll make, let's say, make a new high and then come back to your entry instead of running the equal highs that you had as your target. And you might get frustrated. Oh, this is fucking stupid. Well, yeah, but it gave you a chance to profit and you didn't. So whose fault is that? Because it ain't the market's fault, right? And it's kind of the same idea. I want to take what the market gives. Does that make sense? So matter of fact, the easiest example I can give you is Nasdaq, right? Because remember earlier this week, way earlier this week, let me just take, we have so much, let me take everything off. I'll give you a real easy example. On Monday, right, there was scalping opportunities for these highs. Easy scalping ideas. And if you were trying to aim for too much, like, oh, way up here, it ended up trading lower and you would have either broken even or got stopped out. Or maybe you longed Monday, Monday morning for a new high here. And it's like, oh, well, there's equal highs up here. I might just hold it. And then it comes all the way back down during London, back near your entry. Or maybe Tuesday, easy example. You were trying to long and Monday, right, on Tuesday, Monday's high gets taken. And you're like, nah, I'm just going to hold that for these equal highs. And you don't partial. Then it comes back and it gets you out. And then overnight, or excuse me, not overnight, but from the close of the futures for that hour and then it reopened, right? We gapped and then we've shit since then. So it's like you had a chance to TP at new highs. You had a chance to TP here at new highs. You had a chance on Tuesday to TP above Monday's high if you were trying to long. So it gave you opportunities because that was the easiest target. I mean, think about it from a logic perspective. And this is going to sound stupid, but honestly, think about it. If price is down here and you think it's going to get up here, what does it have to get through first? It cannot grab these equal highs without grabbing the lower set. The lower set is the easy target. It's the easiest. It cannot go up here without going here. Okay? It's just easy money is what you're trying to do. You're not trying to swing for the fences. You're trying to make easy money. And I know that sounds wrong. Well, there's no such thing as easy money. I guess maybe, but in trading, easy money is getting in line with order flow, getting in line with liquidity that's going to be attacked. Right? And it's as simple as that. Man, Dow just unable to make new highs. So if we were already short, what would be the easy target? Would it be the low resistant lows, or would it be lunch's low? The easy target would be lunch's low. That's the next available low. That is the most immediate low distance away, you know, from what you're trying to do. You're not always trying to get the biggest moves. You're trying to get the right moves, right? You're not trying to get the biggest moves. You're trying to get the right moves. So hopefully that makes sense. Anyway, I forgot to show you this. Oh, no, I didn't. I did show you this earlier. 50 or 542.44 is the 1 hour equal lows for SPY. So Ricky, that's kind of what I was saying earlier too. I'm like, fuck, you're trying to go long on NQ, which is fine, just like yesterday. But SPY has these lingering lows here, and I just can't do it. I can't long indices with that resting liquidity here. I can't do it. Right? So that to me is what is likely for the rest of today. We're seeing damn near no real rallies that are sustained. Rally, retracement, rally, can't make a new high. Oh, trades lower. It just looks weak. So we can watch it still. So watch it gravitate there. Watch it just shoot right there. See that? I mean, what do you want, bro? That'd have been easy. Although, again, I wanted it to go higher first, and it didn't do that. Bitch ass price action. Dow Jones, so horrible. But yeah, there's your lunch low. And I have no idea what the short would have been there. I don't know. But I guess if you were short, there's your lunch low right there. So that's at least a partial in case we happen to continue for those low resistant lows. Okay. So, oh, we're at the end of the hour already. That went by faster than I thought it would. Oh, nice, Pop. Very nice. If you would start trading nowadays again, like with no experience, but you could give yourself one tip with that knowledge you have today, what kind of tip would it be? Patience. It would be patience. It would also be the framework, honestly. I mean, liquidity is a huge thing. Getting in sync with order flow is a huge thing. I mean, it's all about getting in sync with price delivery. Here's some more ideas for you. The easiest trades you will ever take are going to be runs to low resistant lows or low resistant highs. Okay? One of you did that earlier on British Pound, which was really solid, by the way. Okay? Ooh, it just took a dump. One of you I don't remember who. If it was you, let me know in the chat so I can give you your flowers for that. Consolidation / equal highs on small time frame, right? That's the target. It took liquidity, right? First leg, second leg. All right. So again, the easiest trades you'll ever take, in my opinion, all right, this is just John Phibbs' opinion. The easiest ones you'll ever take is that second leg. It's fast. You get almost no drawdown. You get shallow retracements, right? Because I make fun of fib traders all the time, right? You look at that low, look at that high. Oh man, well it never gives that 618. Man, everyone talks about the 618. Never gave it to me. Yeah, it's not going to give it to you. It's not going to give it to you because you're not even using the fibs right. If you measure from the target down to the low, that 25% level, that's tradable. This imbalance here is in a discount because it's below 50% and it already crossed 50%. So that's a discount imbalance as part of the second leg to go higher. It's not going to give you a 618. The market's not that easy. The market's not that simple. It's not always going to give you that. Sometimes, sure, but not always. The fib logic or the Gann logic is opposite. You don't measure low, high retracement. You measure from your target down to the liquidity run. Okay? That's what I do, at least. I can't speak for everybody, but that's what I look to do. Those are the easiest trades you'll ever take because it already grabbed liquidity. So the low risk longs can be in here. And if you're trading this, your stop could go down here for 20 pips or maybe here for like 10. I think 10 or maybe 15, depending with spread. Right? And then an easy what? 30 pips or so. Easy trading, just straight to liquidity. It's easy money. Easy money. Okay? That's what I would study. The framework and getting in alignment with price delivery. That's what I focus on. Okay? Let me just run through some of these real quick just to see if we've really done anything. And it doesn't really look like that. Look how weak that is, bro. Look at that shit. That's ass. That is just dookie. Disgusting. Look at that. Look at that. Weak market. Weak market, my friends. Weak market. Yeah, none of them made new highs up here. But now look at Dow for a second. Dow looks somewhat strong here. So now we might run up here. But I'm not going to be interested in this. Yeah. So look, I'm not interested in today at all. If it would have done what I wanted it to, maybe. But as of now, I'm not interested in this at all. I'm going to go catch up on 1984 by George Orwell, you know? Because this book's pretty good. So I'm going to read for a little bit. Because I think if I watch price here and not trade it, like if I go into this knowing I'm not trading, then I'd rather just use my time to read for a little bit. So I'll come back and look at it after the close of business, but I see no real reason to sit here in front of the screen for today. They were long 15 contracts of ES at 5,500. Oh, fuck. Dude, why would you do that? Why would you long at 5,500, dude? $15 contracts? Holy shit, dude. What's the math on that? Let me look. 15 times 50 is $750 a point. Oh my heavens. Ugh. No, 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 no. No, 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 no. No, 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 no. That's a yikes and a half, my friend. That is a yikes and a half. But it's cool. Jonas, it might be. I don't think it's going to retrace that deep though up here. If that's what you're talking about. I don't think it's going to get up there. I don't think so. Hey, you know, Ricky, look, man, we live and we learn, broski. We live and we learn, bro. You know, don't come in here thinking that I'm perfect or that I only take winning trades. Like, bro, I take losing trades too. Okay? Or like yesterday, I took drawdown. Like, I'm not perfect, okay? I don't win every trade either. You know, we're all imperfect. But it's those easy trades. That's what we look for. Days like today, I can't find that. And that's not what people want to hear. Right? Oh, I want to find something. I want something to do. No, the fuck you don't. What you want to do is wait and wait and wait until something high probability comes along. You don't want to just be in there all willy-nilly. You trade willy-nilly and your account will reflect. Then you'll come to me, you know, asking some dumb shit. It's like, oh, I shorted. Well, why'd you short with equal highs? It's against the rules. Oh, well, I longed. Well, why would you long with equal lows? Oh, well, I traded in here. Well, why the fuck would you do that when we've got low resistant highs and low resistant lows and it's at 50% of the range? Why the fuck would you trade that? That's what I mean half the time when I tell you guys, hey, don't do stupid shit. That's what I mean by that. Like, look at it. It's at 50%. I have no idea. Literally, I have no clue what Dow Jones wants to do here. I'm guessing it's going to go higher only based on the fact that the other two are lower. Or like the ES is like whatever it's doing there. The Nasdaq being down here and the Dow trading higher. I mean, we could probably trade higher now, but given the current range, I would not trade this because that's one of my rules. If it's at 50% and you can justify longs and shorts, then you walk away and you don't bitch about missing trades in hindsight. Because we can all come back in hindsight and go, yeah, well, you could have bought below that low. It's like, well, what the fuck? I guess, but everything is high probability in hindsight. Everything ain't high probability in foresight, though. I don't really teach 100% hindsight. I teach in foresight. I teach you what I think the market's going to do later today or, you know, another day in the future. Not always hindsight. Right? So, given the rules that I have, this means walk away and go read. Okay? So, I've learned these lessons through blood. Right? Through losing money, you know, to just being like, say, emotionally wrecked. You know, it's like, say if you lose 3 or 4 days in a row and you're just like, fuck, dude, should I even be trading? You know, like in my early days, I used to second guess this shit. Right? My first like 1 or 2 years, bro, I must have quit like 8 or 10 times. I'd stay away for like 2 weeks and then I'd come back. I always came back, you know? But there's a reason I have all these rules, man. Okay? And the last thing, I could go on all day, but I know you guys don't want to hear me talk all day. The last thing I'll say is this. You only need 1 or 2 good trades a week. That's it. S&P yesterday offered like at least 2. 1 at the bull flag to short, and 2, what I gave you yesterday, bias being short as part of that second stage of distribution. That could have been an easy, that was anywhere from $500 to $1,000 per contract. Okay? Per contract. You only need 1 or 2 of those a week to make a few grand a month. That's it. Not every single day. And that's what I'll end it with. So, Naruto, what are you talking? Oh, you're talking about 1984. Yeah, it is a good book. They're long 20? God. Are you shitting me, dude? They're long 20 oh, dude. Fuck me, dude. There's no way. There's no way they're long 20 contracts, dude. They're about to get their face ripped off. Hey, unless it goes higher, then good for them. But I honestly see, Jesus Christ, look at this 1 hour time frame, dude. Ooh. Dude, who needs a scary movie when you got like this type of price action, bro? You know what I'm saying? Who needs a boogeyman when you got like market makers, you know? And yeah, Rick, you make another good point. It's just the cost of doing business. You know, $400, like if you lost $400, right? To some people, that might be a lot. You might be like, oh my God, I lost $400. But if you've got like a $50,000 account, that's not even 1%. That's almost 1%. It's like 0.8%, I think. So it's like, that's reasonable. So, you know, it's not even bad. But yeah, I think this is going to rip ass. I think it's all going to rip ass. It doesn't make sense not to. But if I'm wrong, I'm wrong. Okay? Targeting 5508. 5508? What's at 5508? All right. Anyway, yeah. Y'all be good, man. I'm going to go read. Be blessed. Don't do anything stupid between now and Friday's live session. All right. I'll put out the market review tomorrow on July 25th. Be blessed, and I'll see you then.